Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is September 14th, 2012 and we are currently looking at price action on the 1 hour chart. And as you can see, we ended what appeared to be another great week for the Euro. We had a 366 pip rally on risk appetite, primarily due to central banks stepping in to ease the market. Now, of course, on last week, we heard an announcement from the ECB that their plan was to purchase an unlimited amount of 1 to 3 year sovereign bonds to help reduce the yield. So, of course, this caused risk appetite to kick in the market last week. But, of course, during this week, on Wednesday, we had the German Constitutional Court ruling in favor of the ESM. And on Thursday, the FOMC announced their plan to do a third round of quantitative easing with unlimited purchases of mortgage-backed securities. But they also decided to extend the low interest rate until mid-2015. So all of this news is what led to the huge risk-on rally we saw throughout this week. And the pair had rallied 366 pips. And this risk appetite also continued even into today's trading session. Let me go to the 10-minute chart right here. You can see that we continue to see more dollar weakness throughout the day as the pair rallied. Of course, it rallied from support down here around 29.80. And it rallied up towards this resistance, this high for today at 31.21 for about 141 pips. And we also had fairly decent U.S. data that also helped to improve risk sentiment. And now the euro, of course, is currently trading at a 4-month high as we speak even right now. So then if I were looking for an opportunity to go long or buy the euro US dollar pair on today, then I would have done so on a pullback to a known area of support. Now, the area around 30.20, where my cursor is right now, had been serving as minor support on a few occasions. Once here around this time, and another time here where it sort of reached near this 20 simple moving average. But of course, what I would have done, I would have waited for price to make another attempt at this 30.20 area before I would have entered a position. So we can see that at this time, price had retraced back to this area of support. At 30.20, I would have entered a buy order upon bullish confirmation and gone long at around 30.27. I would have placed my stop loss on the other side of this support at 30.18 and held on to the trade and took profit when price had reached the 3100 psychological area for about a 73 pip trade. So you can see that how this trade, you could have taken advantage of the risk appetite and the increase in momentum, and you could have had a 73 pip trade for today. And but if I wanted to take more, if I really wanted to take advantage of this momentum, then I could have also closed out near this resistance here at 31.21 for about 94 pips. So this is, of course, one trade with two possible outcomes or two possible take profit positions. So then if I were looking for another opportunity to re-enter the market and buy the euro US dollar pair, then I would have waited after this retracement. You can see here after it had reached resistance at 31.21. You can see how price pulled back and retraced towards this 20 simple moving average, and it found support there. But this was not only just our 20 simple moving average. If I was to draw a Fibonacci retracement of the previous climb higher from 31.21 down to this 30.20 level here, you can see how this level here, 38.2% level, is also serving as support for price. And you can see how price had a hard time breaking and closing below these levels. So what I would have done, I would have entered a buy order upon bullish confirmation, possibly around 30.88. And then I would have placed my stop loss on the other side of this support right here at 30.78. And then I would have held on to my position until it reached the 3100 psychological level for about 12 pips. Or I could have held on to it until it reached this resistance at 31.21 for about 33 pips. But I really wanted to take advantage of this strong risk appetite and the upside momentum, then I could have held on to the trade. I could have trailed my stop loss along with this movement and held on to this position and took my profit when price had reached 31.60 for about 72 pips. So then, of course, this was another trade that you could have actually closed out at a few locations, but you could have also held it on for about 72 pips. So then, of course, after it reached this resistance around the 31.68, 31.69 level, you can see that price went through a deeper retracement. Of course, it could have been due to traders deciding to take profit at these levels, which caused price to pull back deeper. And you can see how it fell. Let me just remove this Fibonacci tool. And it fell and it found support at our 3100 psychological level. And right now, price appears to want to extend its gains higher into the close, of course, leading into possibly next week. So then, of course, that's the price action for today. Of course, I'm looking forward to possibly more risk appetite on next week. So then, of course, the market got what it expected: more stimulus, more liquidity from the central banks, and we can see stocks, equities, commodities, and other asset classes rally on risk appetite. So then, of course, that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Get in, bye.